Hey everyone, today I am going to be covering Canada's recent housing plan. It's entitled Solving the Housing Crisis, Canada's Housing Plan. It was released by the Government of Canada as a response to much of the criticism they've got in regards to not taking Canada's housing crisis seriously. This obviously has a tremendous amount of impact for people in the real estate industry, including real estate professionals, realtors, and mortgage professionals, as well as real estate investors. And so I'm going to take a deep dive into this, do an entire page turn. I'll try and go through line by line the first two sections. If you're watching a short version of this, if you're watching this on Instagram or TikTok, then you're probably only getting about 1/3 of the total content just due to size limitations. If you want to watch a longer version, it's available on YouTube. And if you want to watch the full version, which will be about twice the length of the one that I'm going to be releasing on YouTube, you can get it by joining our community at Realist.ca. Here's a quick little look at what is inside that community. There's it's a school group. There's the ability to have conversations in a thread style, which is traditional of most of the school groups. There's over 100 hours of recorded content in the classroom tab. There's a pretty thorough calendar of several different discussions, masterminds, and workshops that we run throughout the week. So without further ado, if this is something that interests you, we will be doing this type of content on a regular basis and releasing it within that school group. We would love to have you in there. Please go to Realist.ca to schedule a call to see if you would be a good fit for that program. So let's dive in here. Solving the housing crisis, Canada's housing plan. So they start off by contextualizing the housing crisis of the past and before. The government currently really does have this kind of obsession with the wartime language. So they talk a lot about the end of the Second World War, and the country was reaching a defining crossroads when you had this huge influx of soldiers returning home. And you also had a workforce that was really working in the manufacturing space to support that war effort. And then they go on to discuss the housing crisis of today. They outline a lot of key things in this that are going to have a huge impact on real estate investment for the next decade or several decades, whether or not any of these policies are actually executed. And I think that's the big thing. There's a lot of good ideas in here. I think a lot of voters are struggling to trust the current administration's ability to execute all of these good ideas in here. So they talk about solving the housing crisis, and they really are targeting this type of document to young Canadians. They say all young Canadians are asking for is a fair shot. And so what they want to do is they want to try and balance housing outcomes. One of the most notable ways they did this recently that was announced by Finance Minister Chrystia Freeland was that they are going to allow 30-year mortgage amortizations for the purchase of new homes. This is obviously in an effort to try and stimulate new home construction. And we know that, and that's for first-time home buyers who can get a 30-year amortization if they're buying a new home. It doesn't really make a ton of sense because you're usually putting a 20% deposit if you're buying a new home, and yet the program is designed for those insured mortgages which have less than a 20% deposit, so there's a little bit of a mismatch there. So they start by saying that their goals are to build more homes, make it easier to rent a home, and help Canadians who can't afford a home. Those are the three categories, sections 1, 2, and 3. I'm going to be covering sections 1 and 2, the yellow and the blue here. So to start off, they say building more homes. This is the first policy proposed here is really, really interesting. Making the math work for home builders. Number 1, introducing an accelerated capital cost allowance for apartments. What they say here is they're going to create the next generation of Canada's rental stock to get them built faster by introducing a temporary accelerated capital cost allowance measure that will be proposed in the budget in 2024. This is the first ever tax reduction that this administration has ever put in. And I know that's true because I tweeted that, and the housing minister, Sean Fraser, who obviously had a lot of oversight on this document, retweeted that. First tax reduction that was done by this government, period, since they've been elected. And it's about housing. And what it does is it increases the capital cost allowance rate from 4 to 10%. So you get a 6% increase times the depreciation amount that you're able to depreciate that capital cost allowance by if you're creating new units. And so the idea here is that people who own real estate actually get a tax incentive to invest money in the renovation and creation of those units. This will be eligible on new purpose-built rental projects, and they would have to begin after April 16th, 2024. So this is effective almost immediately, 4 days from now. And it would expire in 2031. The next one, we already knew this took place. They removed GST for rental housing. So people who are building purpose-built rental housing no longer have to do an HST or GST self-assessment to pay HST on the building that they just built, as long as it's a purpose-built rental. So if you're building rental, you don't have to pay HST on it anymore. Increase the annual limit for Canada mortgage bonds. This one's interesting. Again, this is something they already did. They announced it in November of last year. They increased the Canada mortgage bond issuance from $40 to $60 billion. This kind of could be a little bit inflationary because they actually are giving, it's the capital pool that goes to either owner-occupied, so insured mortgages. This is CMHC's capital pool. So either it goes to insured mortgages or it goes to MLI Select Mortgages, which is also insurance. MLI just stands for Mortgage Loan Insurance, by the way, with the CMHC. So this is money that goes to owner-occupied purchasers or purpose-built rental apartment construction financing and term debt. This should get a lot of housing created, and it likely will. The challenge is that not only did they do this, but they also committed to purchasing 50% of those Canada mortgage bonds, which has been argued that it's been done as a method of something called spread capture. So they sell their mortgage bonds at a yield of, let's say, 3.5%, and they buy Canada mortgage bonds at a yield of, let's say, 4%. And so they actually capture that spread. So they're borrowing money by issuing bonds. That's them borrowing money. They're issuing a bond, which is a commitment to pay that back at whatever interest rate, 3.5% in this case. And then they're purchasing another instrument from the CMHC, basically, who issues these Canada mortgage bonds at a higher yield, and they capture that spread. So it technically generates income. But what it also does, and this is the part that they're not going to tell you publicly, is it also suppresses that rate because they're introducing a buyer and technically an irrational consumer or an irrational buyer to that capital pool, which is effectively becomes a yield curve control. So they can actually suppress the interest rate for those insured mortgages through this program. In doing this, they sort of supercharge the buying power of the lower end of the market, which creates a price floor, which could gradually drive prices up slowly over time, which is probably a policy objective of it. And I know that in their brief that they received from the powers that be in proposing this, that was something that was mentioned that could be a consequence of this. And honestly, it wouldn't surprise me if they were trying to prop up the housing market, which, nobody really wants a housing crash on their books, especially heading into an election. And I'll do an entire video on this a little bit more specifically in the future. So I'm not going to go too far on this one because I want to talk a little bit more in detail about it, and I want to get through this housing plan. So the next one is providing low-cost loans to build apartments for the middle class. This is the apartment loan construction program, which recently was increased by $15 billion, but also it was opened up to post-secondary institutions to build student housing, which I think is interesting. And they state that it's on track to build 131,000 new apartments by 2031-32. A lot of people in the industry, this used to be called the RCFI program, a Rental Construction and Financing Initiative, I think it stood for. They changed it to a little bit more of a clear title. They do like rebranding stuff. And a lot of people in the industry actually like using this program. I've never dealt with it myself, but we have advised a lot of clients who are using this program. The next piece this is an interesting one because they don't necessarily state that this would be for MLI Select, CMHC's mortgage loan insurance program for purpose-built rental construction and term financing. But it says making our programs easier and faster to use. So if the most common complaint you're going to get when people are talking about CMHC, MLI Select financing is that it's not that easy and it's not that fast to use. So they state that they're making changes to the apartment construction loan program, and this program is different than MLI Select. This is actually the government lending money, so CMHC lending money through this apartment construction loan program, so they're loaning it themselves, whereas with the MLI Select program, they're insuring the loans that a bank would lend, thus removing any capital risk for that institution, the bank or whatever lender it is. And then they actually the way they insure those loans is they take those loans and they package them into Canada mortgage bonds and they sell them to the market, and that's how they raise the capital to do it. And those are very low risk bonds for the market to buy because they're insured by CMHC. But very different because the ACLP program, let's call it that, I think they really missed the boat on making it CLAP, but I guess it probably couldn't be reconfigured in that way. But anyway, they actually lend the money right from the government. So it is technically, again, a revenue stream, which I think this government is sort of in a position where they really need to try and get more revenue streams. They're definitely good at spending money, not exceptionally good at getting a lot of it back. Although it was recently announced that the CRA is actually collecting a ton from their real estate audit program that they're doing right now. And I'll do another whole video on that, but I think it's really interesting to see because this is something that I forecasted. I had mentioned when FinTrack started going after banks for real estate related things that I thought real estate is really the low-hanging fruit in the policy world and in the revenue generation world, for the government, a lot of these government agencies that now want to start showing that they're going to generate revenue, that they're going to start actually doing that through the CRA tax revenue and the FinTrack fines that we're seeing. The next piece is actually, so the final piece on that ACLP program is if this extends to MLI Select, to make MLI Select and to make both CMHC loan programs more effective, more efficient, easier and faster to use as they stay, I think that this could really be impactful. The next piece is called Launching Canada Builds, a Team Canada approach to building affordable homes for the middle class, including on underutilized public lands across the country. So they're saying that they're going to complement federal funds with provincial or territorial investments in housing. They're also going to leverage the ACLP program and streamline the process to cut development approval timelines. They talk about the benchmark set by BC Builds, and so they're expecting provincial governments and territories to meet that benchmark set by that program to access federal funds. So they're really tying federal funds to being able to build faster. The next piece is building on tops of shops and businesses. This is something I've thought about for a long time. I call this vertical infill, but there's a lot of like one-story retail with concrete or block walls with typically a steel truss system on the top of it that could very easily hold multiple stories on top of it. They state that they're going to be providing at least $100 million in low-cost loans from the apartment construction loan program to build above existing shops and businesses across the country. This could prevent a huge opportunity for people who own retail, people who want to invest in retail, real estate professionals who transact in that space or know owners of this type of space. I would not discount, because this is a very niche product, I would not discount the potential impact of something like this. The next one is launching a historic public lands for homes plan. So this is about leasing public land, so a lot of land lease. If you follow me on the Canadian Real Estate Investor podcast, you know that we've been consulting with some governments about land lease programs. I think that, again, now we're at an environment where people are buying real estate less for speculation and a lot more for the actual purpose of buying it, which is for the future cash flows. And so land leases actually can supercharge that because you don't have the cost of buying the land, so you actually end up capitalizing the land value into a long-term structure, which can increase the potential cash flow of the asset and reduce the equity burden of the asset on the onset, which makes development a lot easier. So this could actually get quite a bit of land built, and they say that more will be released in the budget in 2024. So I'll be monitoring that closely, and I will be watching the budget because it seems like I'll likely do a follow-up video on the budget because I think there's going to be a lot of very, very key details on housing and on this policy in that document. The next piece is modernizing housing data. As a lot of you know, I am very, very fascinated by and involved in real estate and housing data. I actually am a technology service provider to the Toronto Real Estate Board, and I do a lot of consulting work in data science and technology for the real estate industry, as well as some involvement in quite a few different startups. And the government is basically providing a $20 million stimulus to the Statistics Canada and CMHC to modernize and enhance the collection and dissemination of housing data, including municipal level data on housing starts and completions. I think that this is something that could really help people like myself to help diagnose the problem for the for the public sector. The private sector needs the right data to solve the problem. If you look at what's happening in the US, funds, investment, capital, they all are using data to make their decisions. It's data-driven decision making, and it's hard for funds to actually go into some of these smaller communities without having the right information. And you really only get big data sets in the Toronto, Vancouver, Calgary, and Montreal of the world, where you're not seeing high enough quality or quantity of data to make impactful investment decisions in some of these smaller communities. So I think this could really help. The next piece, this one's really fascinating from my perspective. This is something we forecasted on the Canadian Real Estate Investor podcast a long time ago. This is something that I've been a huge proponent of. I think that the funding is going to be a little light, but regardless, I think that this is really impactful. It says offering low-cost financing for homeowners to add additional suites. So it basically says the cost of renovating combined with municipal red tape made it difficult for homeowners to convert extra space they had into a rental suite, but this is beginning to change. So what they want to do is they want to provide a Canada Secondary Suite Loan Program to be delivered by CMHC, the Canada Mortgage and Housing Corporation, which would give homeowners access to up to $40,000 in low interest loans to add secondary suites to their home. So what they're trying to tap in on here is the fact that we have a very overhoused population. We have a square footage misallocation in Canada, not necessarily a shortage of actual homes. We have a lot of baby boomers, as an example, who have on average between 2 and 3 extra bedrooms in their house, and they only use on average like 30% of the square footage of their house. It says details of this program will be shared in coming months, so I'll be making sure to track this one very closely again, and I'll release any details in the same format that I explained at the beginning of this video, which is in kind of like a medium to short form on Instagram, in a longer form on YouTube, and then in a full length form in the Realist.ca community on school.